Hey everybody, today's video we're going to talk about Roth IRA income limits. So if you haven't already done so, I would actually watch the last video, which is titled Retirement Accounts, Roth IRA and Traditional IRA. In that video I talk a little bit about what an IRA is, but also the difference between a Roth IRA and a traditional IRA, and I go into a little bit of detail about whether or not you should contribute to one or the other, how much you should put in one, how much contribution you should make into one or the other, or maybe both in a given year. And there's some strategy involved, but most importantly, there's some income limits, meaning depending on how much money you make, you may or may not be able to contribute to a Roth IRA or a traditional IRA. So today's video, I'm going to talk specifically about Roth IRAs and the income limits for Roth IRAs. So again, if you haven't already watched the last video, I encourage you to go ahead and watch that video titled Retirement Accounts, Roth IRA and Traditional IRA. All right, so let's go and get into it. So in order to contribute into a Roth IRA, first, if you don't have one established, you've got to establish it first. But assuming you have a Roth IRA established, you need to know whether or not you can make a contribution into a Roth IRA. If you want to make a contribution into a Roth IRA, there's some income limits that you need to be aware of, and I'm going to go over those dollar amounts in just a little bit. But basically, if you want to contribute, you can contribute if your MAGI is below a certain dollar amount. So the first thing we need to point out here and have a good understanding of is this thing called MAGI, okay? So I'm going to briefly go over that and then we'll get to the numbers. MAGI stands for Modified Adjusted Gross Income. Again, that's Modified Adjusted Gross Income. So the question becomes, well, how do you calculate the modified adjusted gross income? So the first thing you need to do is you need to figure out your gross income. And that's going to include things such as alimony, business income, capital gains, dividends, interest, rental or royalty income, tips, and wages. Okay? So if any of those apply to you, you have to add all those that apply to you, add them up, and that will give you your gross income. Once you have your gross income, you need to then, so let's say your gross income's up here, all right? What you then need to do is you need to add up your deductions, because you're going to deduct certain things that I'm going to name in a little bit based on what applies to you. And, if it applies to you, you deduct it. If it does not apply to you, you don't deduct it. So you start with your gross income. Now we have to apply some deductions until we get at our modified adjusted gross income amount. Okay? So if any of these deductions apply to you, you're going to want to add them up and subtract them to your gross income. Some examples include health insurance premiums if you're self-employed, HSA contributions. An HSA is a health savings account. You'll know if you have one. Moving expenses if you're in the military, retirement plan contributions. That would really apply to more so traditional IRAs, not Roth IRAs, but still, it's one example. Retirement plan contributions, and actually, if you contributed to a traditional IRA in addition to a Roth IRA, or you wanted to contribute, you can deduct your traditional IRA contributions from your gross income in this case. Now, side note, before I continue with the deductions, if you want to know what the income limits are for traditional IRAs, I'm going to go over that in the next video. So be sure to subscribe and you'll be notified when I go over traditional IRA income limits. It's a little bit more complex. So some other deductions include student loan interest, and 50% of self-employment taxes. So those are some deductions that may or may not apply to you. If they do, you want to subtract them or deduct them from your gross income. And once you deduct everything, you're going to be left with your modified adjusted gross income. And once you determine your modified adjusted gross income, what you'll want to do is you want to compare that number with the income limits that I'm going to show you now. All right. So, the moment of truth here. Drum roll, please. Okay. So, if you are married and you file your taxes jointly, the income limit is $204,000. So what that means is if you're married and you're filing a joint tax return and you want to contribute to a Roth IRA, you can contribute to a Roth IRA as long as your joint income is less than $204,000. Okay? So that's the married filing jointly. Now, if you're single or you're head of household, the limit is $129,000. Okay, so that means if you're single, if you're filing as a single person, if you're filing as a head of household on your tax return for 2022, your modified adjusted gross income cannot be more than $129,000 in order for you to contribute to a Roth IRA. So those are the income limits. All right, and again, this applies to tax year 2022. All right, we're in 2022. That's this year. Now, before I wrap up, I do want to mention one thing, though. You may be wondering, oh man, well, we're just barely over these limits. Well, you're in luck, because what the IRS has done is they have said, okay, well, for those people that just barely exceed these limits, we're going to allow what's called a phase out. Phase out is, I'll give you an example. So with the married filing jointly tax return, if you make between $204,000 and $214,000, if you make somewhere in between there, you can possibly still contribute to a Roth IRA. But instead of being able to make the full contribution of $6,000 for 2022, $7,000 if you're age 50 and older. Instead of being able to make the full contribution, meaning instead of being able to maximize your contribution at the maximum limit, you're only going to be able to contribute a percentage of that, depending on how much you make. So what I mean by that is if you make $205,000 and you're married filing jointly, you make $205,000, that number exceeds this number, but you're still within that phase out range. So you're not going to be able to contribute the full $6,000 or $7,000 if you're age 50 and older. It's going to be a percentage of that. Maybe it's going to be 90% of that contribution limit or 85%. It depends. And if you like math, then you'll like filling out a worksheet. The IRS has a worksheet that you have to fill out to calculate just how much you can contribute into a Roth IRA if you fall between this phase out range. So again, the phase out range for married filing jointly is $204,000 to $214,000. Okay. The same goes if you're single or head of household. All right. If you make more than $129,000, you still might be able to contribute to a Roth IRA. You just won't be able to make the maximum contribution of $6,000 or $7,000 if you're age 50 and older. So the phase out range for the single or head of household is between $129,000 and $144,000. So the range is a little bit bigger. It's $15,000 range. So if you fall anywhere between that $129,000 and $144,000 range, you still can contribute to a Roth IRA. It's just going to be a percentage of the maximum contribution that you can make. Meaning, instead of being able to contribute $6,000 $7,000 if you're age 50 and older, you're only going to be able to contribute a percentage of that maximum contribution into your Roth IRA for 2022. So hopefully that all made sense. If it doesn't, listen to the video again. And if you want to, feel free to check out the IRS website. That's what I did. That's where I get the information from. Even though there's a lot of information, irs.gov is where I went to. If you type in Roth IRA or traditional IRA, look for, there's going to be there's going to be like an outline of everything that they talk about. Just look for income limits. Can I contribute to a Roth IRA? Something like that. And it'll be able to tell you and direct you to the place in the IRS code where it talks about whether or not you can contribute, and it talks about these limits here and how they apply. So that's all I have for you. Hopefully it made sense, and hopefully this is beneficial to you if you're thinking about contributing to a Roth IRA. So again, these are the income limits for the Roth IRA. If you want to take a picture or refer to this video later on down the road later this year. But as always, I thank you for watching. I hope that this information that I presented today will positively impact your life. And yeah, thank you for watching. Like if you like the video, comment if you want to leave a comment, if you have a question or something, and subscribe. Subscribe if you want to check out the next video, which again, it's going to be about traditional IRA income limits. Okay. So, last thing, of course, if you felt like this was a beneficial video to watch, share it with somebody else. Hit that share button and share it with others. Hopefully we can pass along this information so other people can utilize it as well. So as always, thank you again for watching. I look forward to seeing you in the next video. Take care. Signing out for now. Bye-bye.